everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. All right, today is October 3rd, 2021, and I'm doing a special trading tips video for you all. There's something I wanted to share. So this is not a Bitcoin update. There's nothing really to update. We said that Bitcoin was going to hit our target of 49,200 and then retrace, and that's exactly what happened. Since then, everything's been retracing. And as you know, things correct in three phases, A, B, C, right? According to Elliot Wave Theory. The issue with this is, though, that ABC corrections can look like a million different things. And I had previously done a shorting video, like how to short safely. And I'm going to link to that in the upper right. But to be honest with you, I want to do another one because I don't know how useful that was. Given that shorting is one of the most challenging things that you can do. Shorting effectively in crypto is one of the most challenging things that you can do. It's going to call on all of your skills, all of your expertise, all of your patience, and it's easy to get wrecked, especially doing it on leverage, yeah? So, it's going to be tough to determine what leverage to use, where to put your stops, where to make your entries, where to make your exits. So I really wanted to share some of this because I personally had a lot of trouble shorting in my trading career, and getting the hang of it is so huge. For instance, like we're looking at Tezos right now, and I'm trading on Phemex. By the way, if you want to trade long or short, use my Phemex referral in the description below, please. If you are not yet subscribed or you're not yet enrolled. Thing is, I really see. I want to share this so bad because when I figured this out, I stopped losing money shorting, and not only that, I started making so much more money because I was making money longing, which was always relatively easy. And then I also started making money on the other way and then turning around and longing again, okay? And this is how I do it. Okay, so we know, and I'm going to try and keep this simple. So this is my challenge because it can get kind of complex. So we know that corrections always happen in three parts, A, B, C. Okay, let's zoom out for a second. I'm on the 3-minute chart. I was longing Tezos earlier, and I'd gotten out of it, but I still charted it. And why did I chart it? Because I just wanted to, I don't know. I chart a lot of things. And we got our 5-wave Elliot Wave impulse up, and it hit almost exactly to the dollar where we measured the the end of the 5 waves, right here, right? This was when it stopped at $8.95 thereabouts. From there, we got, a correction. Bitcoin started correcting, and so did Tezos. Now, everything happens in ABC, right? ABC correction. So, just zooming out, we're on the 4-hourly. If you do an ABC correction on this, let me get rid of this. If you do an ABC correction on a 5-wave Elliott wave impulse, usually you correct down to the minimum of correction is the 618 for super duper bullish assets. But most assets correct between the 0.5 and the 382. The 382 is pretty much the distance, the limit. So what I did to do that, in case you don't know, I pulled the Fibonacci, what's it called? In TradingView, it's called the Fibonacci retracement tool, okay? And I pulled it from the top to the bottom because I'm looking for a retrace. And I pretty much pulled it from the top of the wave 5 to the bottom of wave 1. And see, That's 382. Let's zoom in because you may not be able to see that. This is 382. This is 0.5. This is 618. This is the minimum retracement. This is basically the golden pocket, but most things fall in this area, in this region, right? Okay, so we know that much. Now, knowing that we're getting an ABC correction, okay, you're not going, and ABC's basically, there's an A wave that goes one way, the B wave goes the opposite way of the A wave, and the C wave goes the same way as the A wave. My theory on any kind of leverage trade is you want to get in and out. You want to take profit at your initial target. That's my personal theory. I know a lot of people like to sit in trades for a while, and that's fine. If I'm sitting in any trade for a while, it's going to be a long, and I'm going to move my stop loss into profit. And then I can just set it and forget it. But for shorts, I'm particularly careful. I like to get in and out. I don't mess with shorts, especially on bullish assets. And one of the reasons I'm shorting Tezos is because it's the biggest gainer of the day or of the past few couple days. So, the biggest gainer is going to be the biggest loser, right? That's the idea. The biggest loser when you're longing is going to be the biggest gainer in theory. So, you do the opposite. So I hope everybody understands that. Anyway, one of the issues of using the biggest gainers to short is that they're super bullish. Just because they start retracing, they don't stop being bullish. And the second they start getting a little bit of gas to go up against your short, they liquidate a lot of shorts. Okay, so just that is the preface. I hope that didn't take too long. Now let's get into the meat of how I short. You cut it up into sections, okay? So knowing that we're going to get, let's draw this out first. Let's say that we're going to get an ABC correction down to the 382, and I put a little dashed line, an orange dashed line, down to the 382, or somewhere around here between the 0.5 and the 382. This is the 618, this is the 382, right? So let's just draw this out really quickly. And it doesn't matter what it looks like. It doesn't have to be precise. It's just, let's say it looks something like this. Okay, let's just say it looks like something like this. Here, one of my things in my trading journal is make assumptions, go ahead and make assumptions. You need to, to just make decisions and move forward. But know what assumptions you're making. One of the assumptions I'm making here is that this is a flat correction. This would be a zigzag correction. Do you see? And this is a running flat correction. Okay, if you don't know what I'm talking about, please research what a flat correction, what a running correction is, or an extended correction, and what a zigzag correction in Elliot Wave. The corrections in Elliot Wave Theory are actually the most complicated things. If you can master that, you will master shorting. But you can master that on the analysis front, but trading that is a whole nother can of worms. So learn to trade that as well. And the way you learn to trade is with little bit of little bit of capital and low leverage, and plan your trader plan, examine what happened, rinse and repeat, and you're going to get good. Trust me. But you need to practice, and don't make your first trade a lot of money, because you're most likely going to lose it. Okay. So let's just say I'm assuming it's going to be a zigzag or even close to a flat, because basically this is a really bullish coin, and I choose the biggest gainers. So let's just assume it's going to be a flat or a running flat. So the B wave is going to come up to where the A wave started. And that's exactly what we're getting here. Okay, and that's the first thing that people get wrong. They assume that, it's starting to retrace, I'm just going to open my short here. And the issue is they usually don't open their shorts at the top of the wave. They usually open their shorts around, let's say here. Let's zoom in to see more clearly. I hope this is helpful. If this is useful, and if you've been struggling with shorting assets, like, share, subscribe. You know, I hope that my sharing this really helps you. And if you're losing a lot of money shorting, you stop losing money. That's my hope, because I don't want anybody to lose money. I've lost a lot of money shorting. You know, when I say a lot, it's a lot for me. But, you know, I try to practice risk management, try to, you know, only trade what I can afford to lose. Okay, so that's what it's going to look like on the whole. Okay, now when I say I cut it in pieces, that means the following: I don't open a short somewhere here and then just wait till I get to the target. Don't do that. Please don't do that. It's not longing. Shorting is different because you see it goes up and down and up again. So if you open your short here, let's say you think, oh, I'm close. I'm, you know, I opened my short. Soon after it started dropping, the B wave is going to run on you. So actually the thing I said in the last video was, don't even bother opening a short on the A wave. Wait completely until the B wave, the top of the B wave. Try to time the top of the B wave. If you don't know what that means, then, you know, none of this is really going to help you. You need to go back and look at what an A wave and a B wave is in Elliot Wave Theory. But if you know what that means, do not open your short in the A wave or during the A wave. Wait for the A wave to complete. This does two things. One, it allows you to understand the nature of the wave, because once you have the distance of the A wave, you can calculate the C wave and you can calculate the B wave, more or less. You can't calculate the B wave completely, but you can estimate the worst case scenario of the B wave. Okay, and the worst case scenario of the B wave is that it's a running, or in, I think it's extended or enlarged. I forget what they call it. An extended B wave, meaning you pull your fibs on your A wave and it's going to be 1.618, meaning the B wave would come all the way up here. That is a reality. That happens with super bullish assets. Okay, and I'm going to show you an example in Tezos right now. Then once you get your B, so that's the worst case scenario. So wait until that B wave finishes. Another thing you don't do, don't try to use Elliott Wave. Don't try to count the Elliott waves to this B wave. It's going to be difficult. It's very noisy. It's very, very challenging to count it. You can try, but you're probably going to get wrecked if you rely on your count. It's not going to be accurate. The best way I've found to do it is just wait, use stochastic RSI, use other indicators to try and see when it's topping out. Try and see if you can find some bearish divergence on a low time frame. Okay. Okay. For instance, here, this is the top of this B wave for Tezos, and Tezos is super bullish right now. So much so that, okay, this is where we ended up. This is the A wave, the start of the A wave. This is the end of the 5 wave, start of the A wave. We went A, B ran on A. This is basically most people's worst nightmare. A lot of people probably got short squeezed because, let's say they thought they were perfect and opened their short here at 88.937 cents, and they set their stops maybe in profit or something like that. They got stopped out because they're like, no, the B wave can't come past the A wave because it's in a correction. There's no way that if the correction starts here, there's no way within the correction you get a higher price. But that's not really understanding the anatomy of an ABC correction properly, because that B wave can be, and usually is in very bullish assets, it goes higher than the A wave. Okay, so always try to find the top of this B wave. Even if you don't find the absolute top, you will be fine, because at no other point in the correction do you have anything actually going in that direction. The C wave just goes in one direction, the direction you want to go. So only try and short the C wave. Does that make sense? Even if the B wave doesn't come up that much, you're still going to get most of what you need in the short, okay? So let's zoom out again. Let's zoom out on 30. Okay, so this is let's just say it goes something like this, right? Basically, you're doing an ABC. It's a big ABC correction, but I'm literally just shorting this. Cut it up in pieces. Don't try to do 5, 6 moves at a time. You're gonna get wrecked. There's too much going on. There's too many variables. Keep it simple. Short here. And remember, Elliot Wave Theory is fractal. So within this A wave, you're gonna have an ABC, and this is exactly what you're seeing here. This is exactly what you're seeing here. Here is your ABC. This is your A. This is your B. And your C is going to come here. Now that you have a B wave that ran on the A wave, how do you measure your C wave? Simple. It's going to be 1618. Whoops. Because you want the target down, you're going to go from the bottom to the top. There you go. Same tool, but just from the bottom to top. Do you see how I did that? So basically, the bottom of the A wave, or the bottom of the B wave to the top, gives you your running projection of the C wave. And be a little bit conservative. So if that target, say, is $7.50, set your take profit at $7.49. Okay, and there you go. You will have completed and executed a proper short. In terms of where to set your stop, I hope this wasn't too complicated. If you're having this issue, I think you're going to get it. This is going to be useful for you. But if this is way over your head, maybe this is not the video for you. Maybe you're not shorting, and that's fine. But it's a really, really useful to learn. If you can only trade in one direction, you can't make money during the bear market, or you can make very little money during the bear market, and you're a one-dimensional trader. You're not really, maybe you can be successful, maybe you can make some money, but you're literally dependent on the market going only one direction. And I mean, you're cutting your potential profits in half, right? So you want to learn to go both ways. And part of that is being a successful short seller as well as a successful longer. So that's how you get the C wave and you take profit there. Where do you set your stops once you get in? Basically, set your stops very generously. Obviously, you also have to look at your risk appetite. Once you put the money in and you put that stop in, consider, mentally project that you lost that money. Because there are some times that you will. And if that breaks you, you're going to quit. And then the market wins. You're not going to keep learning. You're not going to keep getting better. And you're not going to get to the point where you get good enough to make life-changing money or a lot of money where you're profitable. Okay? So think about, let's say, for instance, let's say I only have, let me just erase this stuff to make it very more clear. Let's say I only had this, okay? My A wave. I saw the asset Tezos going down. Bitcoin started correcting. Okay, I want to get into a short. I want to profit from this move. I know kind of what's going on, okay? So I wait for the A wave to execute. That takes a few hours, okay? We're on the 30-minute chart. Look, that takes a long time. It takes a lot of patience. The B wave runs, okay? I'm waiting for the top. I see, okay, a lot of wicks to the upside. The B wave seems to be complete. Okay, I'm on the 30-minute chart, 15-minute chart. It's not too low time frame, so I can, it's pretty reliable. Now, where do I put my stops? Easy. If you let the B wave run, you put your stops above it. Simple, and you entered around here, you put your stops there. That's not too bad. Your percentage, 2%, 3%, that's fine. But if you had started from here, good luck. If you started in the A wave, good luck. Okay, so that's how you short. And then the beautiful thing about this technique is, let's go back, and this is the last thing I'm going to say. Once you get here, what are you going to do? Long the heck out of it to here. Because it's coming back. Because that's what price action does. Especially bullish assets. They come back on you and they basically correct, or they retest. And then once it gets here, do it again. So that's my tutorial, my little kind of advice on shorting. I hope that was helpful. I hope that was useful. I hope that wasn't too complicated. I try to make it easy.